So frameworks can be either principles-based or rules-based. Okay, if it's a principles-based one, then first of all you establish your objectives of what it is you want to achieve, and then make up principles that ensure these objectives are met. But they are only principles, okay? What they aren't are rules, so therefore they can be applied to all situations. But when you apply them to all situations, you're going to need judgment. Am I following the right principle here? Okay, so a lot more judgment involved. Whereas when it's a rules-based system, it's pretty much a checklist. Okay, it might not cover all scenarios because it's based on certain scenarios, but you do have some certainty. You can say, yes, we followed it, end of story. We followed it to the letter of the law. So it can become a legal matter, so that can be legally checked, whereas a principles-based one tends not to be so much legal. Now, we're going to go on later and have a look at the conceptual framework, which is what the IFRSs are. So the IFRSs are based on a principles-based framework where we agree the principles, then we create the standards based on those principles. Okay, so there's a conceptual framework as a principles-based. Now, they can work together because if you think of a standard, an IFRS, then they are basically a set of rules. Now, the standard might not cover everything. So if something is not covered in the set of rules, well, that's okay. All you have to then go and do is look at the conceptual framework, which will give you a principle, and you can then follow the principle. So in that way, they can be complementary. So you can have the IFRSs giving you a set of rules. If within that set of rules your particular situation is not followed, then go back to the conceptual framework and follow the principle there.